All right. Good evening, mentorship traders. We are on the 3rd of September, 2021. 8 o'clock Indian Standard Time. We are conducting our mentorship invest meet. Let's talk about the index sectors and then we'll discuss the stocks. Now, what a week it was, right? Let's take a look at the weekly chart. I have over here Nifty Futures. And finally, we get a very nice, confident breakout from this rising channel. 611 points positive on the Nifty, 3.5% more than that to close at 17,329. Since the breakout above that 16K mark that we had here for the last 5 weeks, the index has shown very good resilience, very good conviction, and the gains have been very steady. Not much hiccups. If you can take a look at the daily chart, which is on my right hand side over here, since the breakout, just a little bit of short term. This is the 75 minutes. Just let me change this to daily. It will be clearer. There you go. So this is the daily. This is the 16K breakout, and since then, just a little bit of correction over here. But overall, it has been a high momentum led by good participation from strong stocks and strong sectors. All this imply that we are in a very strong uptrend bull market. Yes, indicators are stretched. Yes, prices are stretched. Such stretched behavior of price will definitely lead to a consolidation or correction. Yes, everything is understood. But the main point that we should understand, accept, is that it's a bull market. Try and stay with the underlying trend. It'll be more beneficial if we think and act in line with the trend rather than thinking and acting against the trend. Number one, I generally do not use Fibonacci for my short-term trading, but when it comes to a situation like this, I have drawn few levels based on my learnings and past experience, and I have got 3 levels for you. 17,300, that's exactly where we are right now. 18,900 and 19,600. The possibility of these levels, one of the levels are anyways been taken care of. The possibility of 18,900 or 19,600 is definitely there, but may not be immediately. Of course, will take some time, but these are the levels that we can work with from a medium-term perspective. From a short-term perspective, next week it will be interesting to see how the market deals after we had this kind of momentum, after we had 600 points rally, what that it tries to attempt next week. Let's come here and let's take a look at our sectors. This is the stockcharts.com RRG graph, which we use to understand sectoral behavior. And if you take a look at the weekly percentage change within the sectors, if I sort them, of course, you can see real estate, big 10% move. And at the bottom, we have 1.7% move from IT. And the rest, you can very clearly see it's around 3 to 5.5%. It is not a situation that where 1 or 2 sectors have done good, the rest are average, 2 have done bad. No. Across the board, across the sector, the markets have participated. This is another strong point. Now, in terms of the tails and in terms of the movement of the sectors, with Nifty as the base, we've been talking about real estate and IT. I think for consecutive weeks, real estate, we've been saying that it's in the leading quadrant and look to buy on dips, and that's exactly how stocks like DLF and Kotak Properties, Shobha Developers, etc., have moved exceptionally well. These 2 sectors, along with FMCG. Now, FMCG goes into the leading quadrant from the improving. If you've been following this, you remember that over the last 3-4 weeks, this drift is happening. Hindustan Unilever takes away the cream of the movement, but the sector has moved into the leading quadrant. Another was consumer durables. There you go. Both of them from improving goes to leading. This is a good sign. This is a sign that the participation from FMCG is likely to continue. Let me add another point. Market is at all-time high, more than 600 points rally this week, and defensives have also moved. We generally see the markets hiding behind pharma, defensives, and IT when the markets kind of comes down, but that's not the case here. It's the defensive which has rallied significantly. So let's keep that in mind. Let's focus on the improving. Financial services are trying to improve. So we'll keep this in mind for the weeks ahead, for the months ahead, whether this sector starts to pick up performance or not. Worry point, Bank Nifty is still very much in the lagging quadrant, which is the case for private banks and the PSU banks. Let's take a look at Bank Nifty. Now, Bank Nifty has given us the breakout. It has sustained well, and it's little shy of its all-time high. When you, however, take a look at the constituents of the Bank Nifty, you'll find that there is a clear-cut divide between the performance of the private sector banks vis-a-vis the performance of the PSU banks. Within the PSU banks, only focus on State Bank of India. If the Bank Nifty follows the Nifty to a new life high, then the rally in the Bank Nifty has to come from private banks and of course State Bank of India. ICICI Bank, strong trending counter, look to buy on dips. Axis Bank, beautiful breakout that we had in the stock, inches at the all-time high, look to buy. So the private sector banks, Axis, HDFC and ICICI Bank, should be in your radar whenever they come down by 2-3% or a little more than that. The other stock in this sector, which is trying to do a catch-up game, which has been underperforming for a very long time, is Kotak Bank. It is taking a little bit of time. I would not suggest you to go for Kotak right now. Let it show some more strength. And within PSU banks, I think it makes sense to just stay with SBI. But doesn't look so good. The banking per se still looks very divided. So the movement, the participation will stay like this. Auto continues to stay in the lagging, but if you can see the way it has flowed, the relative strength is completely gone. And when it generally goes down like this, the one thing that starts to pick up is the momentum of relative strength. This implies that we are likely to get a short-term downtrending bounce back. So when the stocks are in a downtrend, like a bear market kind of a bounce back. So if you go and take a look at the auto stocks, let's say you take a look at Maruti. You take a look at the right-hand side chart over here. On my right-hand side, it's a daily chart. It's a clear downtrend. Now we are getting this short-term bounce back. That will also be the case with Hero MotoCo. We've got a bounce back. That will also be probably the case with M&M. We've got a bounce back. Now it falls. So auto per se is in a downtrend. It's a weak sector, and it's likely to give us a bounce back. So if you participate in this sector, make sure you're a short-term trader or a very, very long-term investor. Nothing in between, please. Okay. Going back to the RRG graphs, the small and mid caps continue to do good, right? It's the financial services which are likely to pick up. Banks will be interesting. I think it will be selective. Energy, we spoke about Reliance at length. Energy is also in the lagging. Now it can pick up. So we should keep an eye on the OMCs now. BPCL, IOC has given a good move. Gas Authority of India Limited also can be an interesting stock to keep a watch. Overall, to sum it up, there is no doubt we are in an uptrend. Number one, there is no doubt that there is enough strength, resilience in this uptrend. What not to do is not to go contrarian short, and I've probably been saying this for over a month now. What to do is try and select relatively stronger counters which are giving us a breakout, or swing long trades. That is a pullback, buy on a dip. Infosys will be a very good example. For example, if you take a look at Infosys, the stock has come off over the last 2 weeks. It has hit the short-term supports. Once it starts to consolidate, play these kind of stocks on the upside. Okay. Keep a bullish bias unless the market correct significantly to prove us wrong. Till then, I think these are the times where the market essentially gives 2 to 3 months kind of very good trending movement, and rest of the year they consolidate and correct. This is the phase towards Diwali. I think we are heading towards that. 2 more months, 1.5, 2 more months. So let's see how much strength the index can offer us in this rally. But seriously, try not to go contrary in short. Okay, trade well next week. Now, like always, let's start and discuss about stocks which are there in your portfolio and the ones that we can look to add next week.